Less than a week out from Labor's second budget, let's bring in Cherelle Murphy. She's Chief Economist at EY. And Cherelle, one of the few economists who actually predicted yesterday's rate rise. Why did you think the RBA would move as they did yesterday?
We still have an inflation problem. Inflation is certainly off its peak, so it's not 7.8%, but in the year to the March quarter, it was 7%. We also know that there's still kind of underlying pressure in the economy for upward pressure on prices, particularly services prices. You could see that in the CPI data. So that's kind of still going up rather than turning. And that's one of the things that the Reserve Bank is concerned about because it does lead to sort of ongoing momentum. And then, of course, there was the house prices, which were showing some signs of picking up again in the last month. And then, as I say, sort of that ongoing wages pressure, the tight labour market, to me, it just added up to the likelihood that they were going to tap the brakes, a bit of insurance against losing control of the inflation outlook.
And is this enough now, or will there be more?
I wouldn't rule out another one. I think, we have to watch the data. That's
another one next month, or
potentially, or within the next few months. Again, it's easier for the Reserve Bank to act sooner rather than later. They kind of get more bang for their buck, and it's more effective quicker. So they may want to put that in place to ensure that down the track, that inflation number does come back into the 2 to 3% target band.
And I know this is not necessarily something that would drive the decision-making one way or the other, but when the RBA is trying to affect behaviour with these moves, going against the market expectations, albeit not yours, but the market more broadly, that should have an even bigger impact.
It does, you're right, because if the market is expecting it, then you don't see so much reaction in those futures prices. It's sort of embedded in people's expectations already. So then if they didn't expect it, they have to kind of revisit those expectations. These factors are quite important actually in how powerful that rate change can be. How
does this feed into the budget? I know that the budget had pretty much been signed off, but Jim Chalmers has been saying for months and months that the context for this budget is high inflation and it will be marked by restraint. We'll see how much restraint next Tuesday.
I think what this does is it highlights the importance of not adding any fiscal stimulus to the economy at all. So we've seen a bunch of announcements from the government trying to lift social welfare payments, for example, and all very viable, all very legitimate policies. But we haven't seen a lot in terms of raising taxes or pulling back on expenditure. So I think, if anything, this just reinforces to the government that they don't have any room to move on fiscal policy. They've got to keep it tight so that they don't make the Reserve Bank's job harder, which essentially means so that they don't allow voters' interest rates to go up beyond what they need to be.
There's been a big push for an increase in job seeker, the single parenting payments and so on, and they're all obviously very worthwhile ideas.
Yeah.
But they are inflationary, aren't they? Because every dollar that would go into those payments would be spent. Is it fair to say they would be adding to inflation?
Mostly any dollar that goes into the budget in terms of adding money to people's pockets is inherently inflationary.
Can they balance it off with other measures?
Yeah, and that's what they really have to do. So no one is arguing that those, particularly on low incomes, need some help right now.
Of course they do,
the economy is really tough. It's the cost of living clearly has gone up. We know the job seeker hasn't been keeping up with that cost of living. It's really, really tough. But what they need to do if they want to help out here is they've got to kind of take it from somewhere else and compensate in an equivalent way. And as we know, there are plenty of ideas out there as to how they might do that. It's just a matter of kind of getting the balance right.
And some of those ideas, what would like the NDIS? Is it sort of the wastage around that, or where are you thinking?
The government's obviously looking for getting more value out of the dollars that it is spending, and it's absolutely to be congratulated for that. I think that's really important work, but it's probably not enough. So what we're talking about here is actually taxing more or spending less. It's really that simple. We know there's lots of concessions on different taxes, superannuation, as we've seen, etc. These are all areas where the government could potentially be a little tougher if it wants to compensate those at the lower end.
Chief Economist at EY, Cherelle Murphy, thanks, and As I said, you're one of the few that got it right, the prediction yesterday. Well done on that. We'll talk to you soon.
Thanks, Kieran.